Hello, everybody, and welcome to Hash Rate. My name is Mark Jeffrey. My guest today is DeFi Dave of Flywheel Pod. But first, a shout out to crypto exchange MEXC. Join MEXC using my link in the YouTube show notes. Get up to $4,100 bonus. So use my link. Join today. So hello, Dave. Welcome to the show, and happy merge morning.
Happy merge morning. Thanks for having me.
Dude, my pleasure. So what were you doing last night while the merge was going down? Were you watching it live or?
I actually set an alarm to for the merge. So I took a quick late night nap and then I had an alarm and I just wanted to be there around the merge. And then it was the merge. I was like, hey, it's the merge. Yay.
Yay.
But what exactly happens? It's if I had to visualize it, it's just like a train switching tracks basically. That's basically what happened. But yeah, I was up for the merge. I was like, yay. And then I was like, all right, time to try to go back to sleep. And I tried to go back to sleep. And I did at some point. So, but yeah.
Excellent. Yeah, I was watching Rand Nooner's show where they were, basically counting down to the merge. Then the merge happened, and they had a bunch of people that were sort of watching the chain through various ways to see, was it breaking? Were there weird things happening? They're like, nope, it all looks good. But the funny part was they kept checking the price. They're going, okay, so now that we have a successful merge, what's going on with the ETH price? Oh, yeah. Look, nothing. Nothing's happening. Okay, we'll check back on later.
Did you see the last block, the input data on the last block, what was in there?
No, I did not.
It was actually part of a quote from Terence McKenna, from his most famous quote, "Nature loves courage," and part of the quote is the universe will not grind you under or lift you up, dream the impossible dream. It's a beautiful quote, and actually it's quite symbolic of everything that they're doing at Ethereum and the ethos of everyone there, and trying to do the impossible and going out into the dark and going out into the unknown against all odds and actually landing on the other side on your own feet. So I thought it was
nice.
Quite beautiful. I saw that in the input data. Somebody pointed out to me. I'm like, no way, because I'm a huge Terence McKenna fan. I've been for a very long time. So when I saw that, I'm just oh my god, I got to point this out. I got to. So it's cool.
Well, that is super cool. So I also love the fact we're both wearing white today, and you're calling me from a spaceship or something, which I love. So it's all good.
I'm actually at one of my old workplaces, BC before crypto. I used to work out of this post-production studio, and now I'm I was just in the area. I'm just I'm gonna pop by, say hi, and that's what I usually do. They recognize me. I don't do post-production stuff anymore, obviously, but yeah. But it's cool to stop by.
Totally good. Well, I really appreciate you coming on the show today to talk FRAX with me. So let's just jump right in. What is FRAX in your own words?
FRAX in my own words. FRAX has gone on a journey since it started, to be honest.
But it's a stable coin, right? So first and foremost, I know there's more to it than that. But first and foremost, it is a fractional reserve algorithmic-ish.
It's a fractionally algorithmic stablecoin, and to understand FRAX, you basically have to understand how other stablecoins work. You have fiat-backed stablecoins, money in the bank equals money on chain. You have crypto-backed stablecoins, so over-collateralized stablecoins like DAI. So you basically take a loan out against your existing assets, and it's quote-unquote over-collateralized. And so $150 of ETH equals $100 of DAI. And then you have algorithmic stablecoins, and you have a whole plethora of algorithmic stablecoins and different ones, and it's you have this.
Some of them are bad. We found out recently.
Yeah, you have this cutting edge.
was one of those.
Financial experimentation with all these stablecoins. It's actually really cool. As Amin said on my last podcast, 20 years ago, if you're an economist, all you could do was write a paper and hope that people would read it. But today we can actually see our experiments in action, such as the seniority share papers by Robert Sams. And so what FRAX is, it's basically the fractionally algorithmic stablecoin. It's the best executed implementation of that seniority shares paper that Robert Sams wrote 8 years ago. And so, it's a stablecoin.
When you say, wait, you just ran through a whole bunch of stuff real fast, so I apologize. Yeah. We like to try to keep it dumb, simple as much as we can.
Yeah.
So when you say seniorage shares, right?
Mm-hmm.
So there was a paper written. So what do you mean when you say seniorage shares? Can you explain that?
If I had to give a definition to seniorage, it's basically, profit is generated from the minting and redeeming of the stablecoin.
Okay, so isn't that so? It's sort of the creation and destruction of the stablecoin, not the
Yeah.
transaction fees.
Yeah,
And the creation and
the
go ahead.
arbitrage of it. Yeah, exactly. The creation and
Yeah,
destruction. That's one way to put it. Yeah.
and the creation and destruction happens to keep the peg stable. Is that
Exactly. So
Okay.
how Frax works in its like V1 basically is if it's above peg, if it's $1.01.
Above a dollar? Yeah.
Yeah, then new Frax is minted because the more supply there is in circulation, it goes down in price. And then if it's like 99 cents, then Frax is redeemed. And when Frax is redeemed, there's less in circulation and it reaches back to a dollar. And Frax, I like to say, is backed, I would describe it as hard assets and volatile speculative assets. And so the hard asset here is USDC. And what makes USDC a hard asset is that USDC itself is redeemable for fiat. And so like that's what makes it like a hard asset here in Frax's example. And then you have the volatile speculative asset, and that volatile asset is FXS. And FXS is the governance token of Frax. That's the algorithmic portion of Frax. And basically, there's a ratio between hard assets and volatile assets. And that adjusts based on the demand and appetite of the free market. And so if there's like a demand for a lot of Frax, in theory, the collateral ratio goes down. If like there's a retraction, then the collateral ratio goes back up.
So let me take a crack at something here. So Frax has a treasury of assets which back it, but it doesn't back it fully. It backs it partially or fractionally, hence
Well,
the name, right? Is that correct?
I like to say that Frax is like fully backed. It's like backed in a different way than other stablecoins.
Okay.
So like to break down like what the backing of Frax is, like, you know, at like a simple level, it's USDC and then FXS. But that USDC backing Frax is actually put to work. So like you have this thing called AMOs, and I want to slow it down here. So AMO stands for like algorithmic market operations. So the Federal Reserve, the Central Bank of the United States, they have something called open market operations, and that's just a term to say the Federal Reserve will perform actions in the open market to help maintain the dollar relative to inflation. So like a relative like reasonable inflation rate. So with AMOs, what Frax will do is perform activities on chain that maintain Frax to a dollar peg. And so Frax will actually use other protocols themselves to maintain that dollar peg. And so the best example of that is the Curve AMO. So Frax will basically, you know, take the idle USDC, SDC, it will mint fresh Frax, and it will inject it into Curve LPs, now into like the Frax BP pool. And like from that, you have like liquidity from Curve backing Frax itself. So it's like the Curve LP tokens are backing Frax. And so now that's like now that's back. So like I think the Curve AMO is like 70 or 80% of backing of Frax. And there's other AMOs as well. There's like, you know, Uniswap AMO, Aave AMO. And now what's really exciting with Frax coming out with these new primitives such as Frax Swap and now Frax.
Yeah, let me just stop you for a second. I want to restate what you said.
Yeah,
I want to make sure that everyone understands, including myself. Right. So what I said earlier is effectively correct. There is a treasury, and it's largely filled with USDC, but not just USDC. But that is sort of the bulk of it. Correct?
I would say like derivatives of USD. It's not like it's like holding USDC.
Yep.
I would say most of it is Curve LP tokens, to be honest. Like that's
okay. So that's the treasury. Okay, I got it. So so you've taken the USDC, you've done something with it, and now you put it in a Curve for liquidity, and now you have Curve tokens, which represent your deposit in Curve. So that's the derivative of USDC. And then part of it is FXS. You actually have FXS, which is the governance token of Frax, and the token that ranges up and down in value, kind of hopefully wildly up, right? But you know, it's all over the place. You never know where it's going to be. It's not a dollar. So there's that, and then you've basically used the USDC to mint more Frax, the stablecoin, and supplied that to Curve as liquidity against, I believe, 3 Curve is the other major pair.
Yeah, it's the 3 Curve. Yeah,
yep.
there's the 3 CRV, and now there's Frax BP.
Right. And so the 3 curve is 3 other stable coins, right? So that's Tether, USDC, and one other one, which I forget.
Die.
So, it's DAI, right. So, yeah, so basically you have 4 stables all kind of stabilizing each other in this curve pool that are all tradable against each other for exactly $1, which makes them all tend to be worth exactly $1. So that's the idea. And the bigger the pool is, the bigger that stability is.
Yeah.
So
I just want to say Curve is so cool. Like the fact that you can trade like hundreds of millions of dollars in stable coins with like very little, if not none slippage. Like what a mathematical feat. Like shout out to those guys for figuring that out.
Totally agree. Curve is one of the most amazing inventions in all of crypto.
Yeah.
No question about it. It's very fun. It's as fundamental as Uniswap or, probably maybe even more important.
Yeah, without it, like none of these stable coins could exist, honestly. Like something for Curve had to come along for like
you're
something.
right.
Yeah,
I hadn't thought of that, but you're absolutely right.
Yeah, for something like FRAX to exist, like everything, it just like makes sense. Like how like Curve like built themselves. I like to think of them as like a shelling point of DeFi right now, especially with like how they do their VE emissions. Like they're the first ones to do that, and the biggest thing that people like either like talk shit about VE or like say what they don't like about it, but VE got people to care. VE got people to like spend like hundreds of millions on bribes, hundreds of millions on vote incentives to like for all these like different stable coins to like maintain their peg and to promote liquidity. Like the fact go ahead.
Just for those who don't know, like when Dave says bribes, I know that sounds horrible and your brain just went, wait, what? Bribes?
Yeah.
But it's how the ecosystem works. So it's not really
I like to use the term vote incentives instead. Honestly, that's
also
what I
sounds
usually use.
Horrible, but okay.
Yeah, it's it's like your vote incentives for emissions or inflation.
It's just how business is done. And Curve is like the center of the DeFi universe. I think of it as like the Federal Reserve. And I know it's not an exact comparison, but it is the biggest source of liquidity and kind of ground zero for everything else. That I agree with. I hadn't thought of the stablecoin thing. You're absolutely right, though.
Yeah.
Without the invention of Curve, you could not do all these other experimental stablecoins. They would have no way to exist.
Yeah.
Curve, the liquidity on Curve and the tradability of that one stablecoin for another is what gives any stablecoin its value primarily. And in fact, when Terra and Luna died, right, it mostly died because the Curve pool was tipped over.
Yeah,
it was imbalanced. That is what caused the death of Luna. Basically, that was it.
Exactly.
So let me read a little bit. Let me read a few things off here because I want to make sure our listeners know some of these stats. So, FRAX right now is the number 5 most popular stablecoin in the world by market share. It has 1% of the entire stablecoin market, which is amazing. Just for comparison, Tether's at 44%, USDC is at 34%, BUSD is at 13%, and DAI is at 4%. And also a shout out to TrueUSD. We just had them on the show last week. They have 0.7%, so they're nipping at FRAX's heels, but not quite where FRAX is. So that raw numbers, that ends up being there's 1.5 billion in FRAX out there, and 67 billion of Tether. So just to sort of give everyone an idea of the lay of the land, so 1% of the entire stablecoin market is enormous. Would you agree?
Yeah. Oh, for sure. It's $1.5 billion, like all on chain, like all in a protocol. Like what a feat for now. Like a lot more building to go, of course, but like everyone can like give a pat on their back. Like all the different experiments that came and went, all the different main characters that reared their head, and like everything that's happened over the past year and a half of this algo stablecoin saga of sorts, and like FRAX is like the last man standing. It's like it's really something. Like you have DeFi, which is like this like one like really avant-garde part of like crypto and finance and like what's going on over there, and then like you have like the most degen and risky of DeFi, which is algo stables. And I say that because like algo stable success is, well, stablecoin success in general is binary. It's either worth $1 or it's not. Either works or it doesn't.
It really is.
Like it's like these like the stablecoin devs are like the brain surgeons of DeFi devs, of crypto devs. Like they have to be perfect. Otherwise, like it doesn't work. And like they have to, and it's more, and unlike you can't just like fork something. You can't just be like a dev to like be a stablecoin dev. You have to be an economist. You have to understand how markets work and this and that. It takes like really seeing the forest through the trees and like really having like, you know, the highest standards possible to make a stablecoin.
Yeah, no, I agree. It's definitely one of the most difficult things you can attempt to do in all of crypto.
And there's a reason why FRAX is where it is. I'll put it that way.
Yes. Yeah, no, I totally get that. And I know that I've been studying all these other stables or other algo stables for several months, right? So Spell and Mim, I participated. I played around a lot with that. The Bean guys, I know them pretty well now, and I've played around with that. You know, Dyad, our first show actually was a new algo stable called Dyad. So I've now spent a lot of time sort of digging around this world, and it is very difficult. I would agree. So one of the things actually the Bean guys, they have a great question. I'm actually doing a podcast where they're going to interview me weirdly later today. But one of the questions they had on there was, why do we need stable coins? Like, why are they so important? And I actually have a list of my own answers, but I'm curious, what is your answer to that? Why do people need stable coins?
I think it's like one of the only, if not the only, proven use case for crypto and blockchain so far that is like used at a wide scale. You know, people always go back to stability. People always go back to safety. People always go back. If people always go back, you can't just like be in like volatile land all the time with like ETH or Bitcoin or whatnot. And so like stable coins, like, you know, I've been paid in stable coins before. I pay people in stable coins before. You know, it's like still small, like that economy. Like right now, stable coins are primarily used for trading, and people are like, oh, like, is that all good stable coins is used for? Like, no, like the economy around stable coins is like people are getting paid, and like there's also remittances. There's also like go to like any like global south or developing country and like ask them about stable coins. Like, yeah, they'll tell you like it absolutely has a use. So like,
yeah,
like
totally
between like, you know, like our like, you know, on-chain economy that we're building, between like, you know, people like using it as a hedge against like inflation in their own countries, and just between like, you know, how it's actually being used for trading. Like, you know, Tether is like the stablecoin of centralized exchanges. USDC is the stablecoin of Ethereum and on-chain DeFi. Right now, it's the on-off ramp between like the centralized and decentralized worlds. And then what I'm hoping that FRAX is like looked at as like the premier DeFi stablecoin that's 100% on-chain and like that's trusted and relied on, and that becomes like the premier stablecoin for like DeFi and beyond.
Yeah, totally agree. So so my answer to that is a little bit different, but you know, roughly the same thing. So crypto companies, and in fact all companies, need a place to store their dollars on-chain for a number of different reasons. One is just for speed and convenience, but also the threat of unbanking is super real. Yeah. So if you touch crypto in any way, your bank finds out, they may just say, "Oh yeah, get out. We don't serve your kind here." Is basically actually what they say, and you haven't done anything wrong or illegal. They just don't like you, so they will unbank you. And I've seen this happen so many times. So if you can be your own bank and keep your dollars digitally yourself without any need for a bank, hugely useful. Now, also all the exchanges, or at least the ones I use, like MEXC, for example, they need stables in order to create leverage positions of like 50x or 100x or whatever it is. They basically use stables as a lingua franca to create those positions. Without stables, that just wouldn't be possible.
Yeah, exactly.
Yeah, and then finally, we just had A16Z company TrueUSD on here last week, and they said something really interesting, which I wasn't expecting. So they're basically a lending company like Aave with a twist. They're actually doing credit checks. You can't borrow money unless you have $10 million in assets that are unencumbered, and they go and check on it, and they only allow approved lenders. So they're basically a TradFi lending company, but they use crypto rails. And I'm like, why are you using crypto? And their answer was basically, if you use crypto, you can track everything and everything is instant, and that alone is insanely valuable and a giant leap forward from using the traditional banking system, just crypto rails, right?
Yeah.
So that is a huge, like, which I never thought of, right? So there's a massive use case for stable.
the utility
just for that
of
alone.
Yeah.
Yeah.
No,
So,
that's interesting.
okay.
Like the TrueFi stuff is like so straightforward. So
Yeah. It's kind of dopey, but it's so dopey that, you and I are like, oh my God, how does this new algo stable work? That we forget, like, that the world at large, if they just use crypto stables in the simplest way, to them that is miraculous. That is a giant leap forward without any other further complication. Like, we're overthinking it a lot of the time, right? So
Yeah.
I liked what TrueFi said. So, okay. So let's get into overthinking some stuff. So, so I want to hear a little bit more about the other FRAX tokens. So we've talked about FRAX, the stablecoin. We've talked about FXS. I want to talk now a little bit about FPIS and FPI. Right.
Yeah.
So tell me about that.
yeah, so FPI came about from the idea of like.
Well, what
if
is
there-
it, first of all, so people know?
FPI is the FRAX price index, and it's a
Yep.
stablecoin that is pegged to the consumer price index. The consumer price index is something that the federal government comes out with every month. It measures inflation, the rate of inflation, and so there's now a Chainlink Oracle. FPI will it sends like a feed. It sends like a signal and a feed, and so FPI takes that and adjusts based on the CPI.
So the idea is it's a stable coin, but it's not tied to the dollar, because the dollar is suffering from inflation. So it's always buying less and less bread, right?
Yeah.
So what if you instead created a stable coin which basically always retained the peg at the same level relative to all the goods and services that it buys? So,
Yeah.
one FPIS always buys one loaf of bread. It doesn't matter whether the dollar is suffering from massive inflation, and $1 worth used to buy. You need $12 to buy what $1 used to be. With FPIS, it just keeps.
FPI,
it basically stays
not FPIS, FPI.
FPI. Sorry.
Yeah, FPI.
Yeah. So that's the
Yeah.
idea. That's the idea, right? Like a different kind of stable coin.
Exactly.
Stable relative to something else.
And,
stable
it-
relative to goods and services.
And it isn't unheard of, for people to transact with each other based on the CPI. I believe it was in Argentina or some South American country in the 20th century that they actually signed long-term contracts based on the CPI. So if you're signing a lease to a house,
Wow.
Yeah, I actually learned on this from a podcast episode a few weeks ago. Amin Soleimani said that to me. I'm just like, oh, that makes so much sense. And that takes basically monetary policy in people's own hands instead of leaving it into the hands of central bankers.
Wow. So let me get this straight. So the contract itself, it basically said, well, you're paying this much unless the CPI goes up, then you pay double or whatever it is.
Yeah, you
That's
pay
basically-
on the rates of inflation, exactly.
That's kind of amazing, kind of crazy. I mean, I like that, and I'm terrified by that at the same time, because they're basically implementing crypto with pen and paper, right?
Yeah, and this was done in 30, 40 years ago. So
Wow.
yeah,
Okay.
maybe 50 years ago. I don't know. Time is relative.
So right. So FPI. So what is the state? Is FRAX actually? Is that up and running right now? Can I
It is
buy
live.
FPI?
Yeah, you can buy
Okay.
FPI. Yeah, FPI is live on FraxSwap. So
Okay.
it's it's a stable coin. So it's a unit of account independent of the dollar.
Yep.
That's how I think of it. And so
And FPIS is the government is.
the governance
Go ahead.
share. Yeah, it's the governance volatility token, share token. That is that is tied to FPI.
So if I believe in FPI, if I'm like, this is a great product, I would like to participate in its growth. FPIS is the token I want to own. Right?
Yes, exactly.
While the ecosystem is relatively small.
Yeah,
So,
I like to think of it as FXS is ETH, and FXS is the center. It's the sun. It's the center, and then
Yep.
I expect there to be future stablecoin experiments, and FPI is the first of many. And so FPIS is an ERC20 token of sorts built on the FRAX network.
okay.
Yeah.
So is FRAX pretty? I heard a lot about it for a little while, then it sort of seemed to vanish. Is
Yeah.
it still? Are they? Is it not the center of their attention still, or is that?
No, it's still
Are they still-
it's still priority. I mean, right now, FRAX
Okay.
is just shipping so much, but FPI is
Yeah.
near and dear to the team's heart for sure, because it's definitely especially a crypto idealized dream of like, you know, what is an alternative to the dollar? Like, could we build an alternative dollar system? Like, you can hear arguments of like, will there be a post-dollar world? Will there always be like a dollar world? Who knows? I don't know. I've heard like both. But like, you know, it's good to have that optionality out there, especially when you have, you know, Dai and Maker in their forums saying like, Rune saying like, oh, should we depeg? And it's just like, wait, what? That would just like break everything that Maker has done. And then you have
so
like
wait. Tell me about this. So what? So he said. So Dai actually considered depegging, like intentionally.
Well, it's been discussed in their forums. They're like, oh, like because of the whole, you know, USDC stuff, Tornado Cash stuff, this and that. Like, should Dai depeg and be like free floating?
Interesting. Oh, okay. So basically, the idea is we don't want to be a stable coin anymore because we don't want to come under OFAC regulation. Is that
something
that's
like,
the idea?
Yeah. Okay. Something like that. Yeah. Yeah, and then you have like other ones like Rye. You know, probably the most. Yep. Yeah.
Interesting. So tell me, there does seem to be a, you know, there are a number of regulatory sort of pushes going on in the United States. You know, I heard last week that, you know, Biden is considering outlawing Bitcoin or proof of work mining in the United States, which I first of all I feel like that would be insane. I think the outcry to that would also be insane. So I feel like it might be tried, but it won't really happen. And then the other, yep,
sorry, someone just like brought in.
No worries. Yeah. So the other sort of big thing, the other sort of big push seems to be stablecoin regulation. So there seem to be a number of voices saying, like Elizabeth Warren, et cetera, saying, well, for stablecoins to exist, they should be sort of like Tether, where there's a bank account where you must keep reserves in a bank somewhere equivalent to the number of stable coins that you are issuing. So in that world, if that comes to pass, what does FRAX do? Have they talked about that? Like, what is that?
I think the beautiful thing about FRAX is that it's completely on-chain, 100% transparent. Like, if you want to go see FRAX's reserves, you can see like what exactly is backing it at all times. And honestly, if I'm like a lawmaker or regulator and I'm like looking for a system, like this is exactly what you're looking for. And like you were saying with TrueFi, like with blockchain, you can like track, like, you know, you have a record of everything, of like every loan and every transaction. So like, I'm not sure what all the uproar is about. This seems like if, you know, I feel like there's a lot more synergies that people are talking about between like native on-chain stables and like, you know, governments than people realize. It's more so like what I think like what is the bigger issue is like stuff like Luna, where you have, you know, you had like BTC, you know, 50% BTC, which was like in custody somewhere. And then you had like, you know, who knows what else was like in custody it was like everything. But the problem with Luna was everything, the market making, it was all happening off chain with custodians. Like you didn't see any of the reserves on chain. You could maybe see the transactions of whoever, but you didn't see that any on chain. And like, it's like that kind of stuff that is like, you know, dangerous. And then with like stuff like USDC and like Tether, where they're actually holding dollars or treasuries somewhere like off chain, then that's like different. But with like, I think like on 100% native on-chain stables such as FRAX, they're a different category, and like it would make sense like for them to be exempt from those like you know, kind of like regulations being talked about, because like you can see everything on chain. Like, and in terms of like, I know like Sam has said like if like anything like were to come about, like FRAX would be to be cooperative and whatnot. So like I'm not worried about it. Like, I mean, I think it's like, you know, stablecoins are at like the helm of regulation because it's on the tip of everyone's tongue, and that goes to show like how like, you know, how powerful stablecoins are, and like how, you know, how much big of an impact they will have. Because it's like it's really funny because people love to hate on them, people love to like bash on them. It's easy to bash on them, but they're still at the tip of everyone's tongue, and so people from like degens to lawmakers, they're still being like talked about, and like this will be figured out. There will be winners. It's just a matter of like who and when.
Well, I do think, I mean, look, the reason why it's on the tip of everyone's tongue is because, you know, $80 billion worth of value was destroyed within 48 hours by Terra and Luna. And as you note, right, so I think when Terra and Luna started off being fully on-chain. Now, you can argue whether the Luna and Terra mechanism was a bad one inherently or not, but it was 100% transparent initially, right? Is that correct? That is what I saw.
I mean,
is that
yeah.
what you saw?
Yeah, no, I saw it on chain. It was just some back, but yeah, continue.
And then, the snake entered the garden when they started to drift away from pure algorithmic backing and started trying to back it with Bitcoin, right?
I would say it's not that in particular. It was like good that they were backing with Bitcoin. What was bad was like the custody of it wasn't like on chain, and I would say like the main driver of Luna was like Anchor, was these like 20% yields. That was like the main thing. Like it's really funny. I'm not sure if you remember, but at like the beginning of DeFi summer, when like all the yields were just like absurd, and then Luna was just like 20%. Luna was considered the conservative option. It was considered, yeah, it was.
I do remember that.
Yeah, and so that was, but then like, I think like you saw that run up of Luna before the crash. It went from like $10 to $150 or something like that. It was insane, and like that just wasn't sustainable. You saw the same thing over and over again, whether it was with like ESD or Iron Finance, and then Luna. Yeah. It was just happening at bigger and bigger scales.
Yeah, and then the regulators see $80 billion go poof overnight, and there were a lot of smart people who thought Luna and Terra were solid. I had so many arguments with people, very smart people, who thought I was insane for not going in on Luna, and I was just like, I just don't like the mechanism. I don't trust it. Yeah, because it has a single point of failure. That was really it, and so I just stayed away.
That's the fascinating thing. And also, what's fascinating was how much Luna punctured the mainstream consciousness. Like even to this day, when you ask people about crypto, you usually hear like Bitcoin, Doge, and they've heard of Luna as well. It's like it's fascinating.
Yeah,
and I'm just like, and like that's one of the reasons, and like of what happened with Luna. Like that's like the main reason why I started Flywheel Pod. Was because I saw this need to take control of the narrative of algo stables and stablecoins in general away from Luna, and showing like, okay, this is like what's actually like being built and not being like what's being like speculated on.
Yeah, so tell me about let's segue now into Flywheel Pod. I think that's so that's your podcast.
Yeah.
What's the focus, and is it an official FRAX podcast or not?
We are funded by the FRAX DAO. I'm very proud of the 2 grants that we have, but we aren't like officially part of the core team. But obviously like very close. But yeah, Flywheel Pod is a podcast and media resource for everything FRAX, stablecoins, and the world on chain. I feel like there's a really big content desert out there in terms of crypto content. A lot of the conversations I'm having, whether in group chats or on Twitter, don't match what I hear in podcasts, and so I want to bridge that gap and bring like people that I find interesting on the pod. And so we have like Flywheel Pod, which is a flagship, and like I like to keep it FRAX centered, so I like to compare it to like what like Ethereum is to Bankless, like how they're like super ETH maxi. FRAX is to Flywheel Pod, and like where FRAX was to the core. And so like that is like our base, but from that base we can get into like a lot of conversations beyond FRAX. We can get into like the Curve ecosystem. We can get into the world on chain. There's like so many different things we can get into because FRAX doesn't exist in a vacuum. Like FRAX exists relative in interacting with all these other protocols and whatnot. And so we have like the flagship podcast, Flywheel Pod, where me and my co-host Kit, we interview, different people in the ecosystem, whether they're devs, whether they're threaders, whether, whether they're builders, like all kinds of people. We have our weekly FRAX check, which I think is like, I'm very proud of this. We go over, it's like a short, like 20-minute show usually, 15, 20-minute. Kit will go over, the health stats of the protocol. So like, what's the TVL? What's the profitability, of the AMOs, this and that. And then I do a governance roundup. And so it's like it's your newscast. It's your weekly roundup of like everything you need to know about FRAX.
Like this week in FRAX. Basically.
This week in FRAX. Yeah. So this week's in FRAX. And it's like very valuable because like people like don't have the time to like go in and like see everything. And so like, I'm really proud of that. And like, I'm like, thinking there's like a lot more we can do with that with that format in the future. And then we have like other kinds of content. So we have like institutional written content because these institutions and sophisticated investors, like, they're looking for like research and like kind of like to back like why. Oh, it kind of went dark in here. There we go. Why should they why should they be bullish FRAX? And so like we have institutional written research with on our site, and then we have even like beginner content because this stuff is complicated. Like, this is hard. It takes a lot of prior knowledge to understand stablecoins in general. You have to understand like money, then you have to understand stablecoins, then you have to understand different types. Like, there's so much like work you need to do to get to FRAX, and then when you get to FRAX, there's even like more work you need to do. And so like I have this educational series with my friend, and she basically does these like 2-minute explainer videos that are made for TikTok, but we have them on YouTube and Twitter as well, of like the basics of like what is money, what is a stablecoin, what are different types and stuff like that. So I really like
dummies.
FRAX, stablecoins and FRAX for dummies. Yeah, so like I try to hit like different parts of of the whole gambit. So whether you're like a beginner or you're like you just like live on chain, you have like your tent on chain, and you're looking for alpha, like there's a place for you with Flywheel Pod.
Got it. Love it. Yeah, no, I've checked it out. It is great. So
Thank you.
Congratulations on that. So I do want to roll back to one question. So way back when Luna and Terra were going strong, there was a plan to create something called the 4-pool on Curve, right? So we talked earlier about how all these stable coins kind of prop each other up, right? So at this moment right now, the FRAX 3 Curve pool has 747 million total in it. And it's like 60% FRAX, 40% 3 Curve. 3 Curve. And then, but there was a plan at one point to create like just a massive pool of Terra, Terra, FRAX, USDT. Tether and DAI.
USDC,
Right, so just create like this giant 4 pool, which didn't happen because Luna vanished from the Earth before the meteor hit and destroyed the dinosaurs before the dinosaur could create a new alliance. So now that didn't happen, I guess the 4 pool is dead, obviously, but are there any new plans afoot to create similar?
No, there is one live right now, actually.
Okay, let's hear about that. I had a feeling there was, but I didn't know.
Yes, there's the FRAX base pool. I call it the FRAX base pool. So it's a 2 pool of FRAX USDC, and it's actually more than the 3 CRV pool right now. I think it's at 850 million TVL. So they're gradually moving liquidity over, and the idea is like a few months from now is for that to be like the main arena for stables to like pair their stable against, the main meta pool for people to pair their stables against, because FRAX has been an active player in the Curve and Convex ecosystems. And like what's really cool about it is previously before when it was 3 pool, it was a very P2P environment, and so all these different stable coins, whether they were like FRAX or MIM or whoever else, they were all like road incentives and bribing like for like liquidity and for their pool. And so it was a zero-sum environment. But with the FRAX base pool, and I like to think like FRAX has like won like this battle of the Curve wars to become like part, like it's funny, they went from like using protocol like Curve, the protocol itself, to maintain pegged, to now integrating into the Curve protocol itself. And so now FRAX has like won like that battle of like the Curve wars, quote unquote.
Let's talk for a second about that, because a lot of people might not understand how what that means to have won. So I'll give you my version of it. So Curve, it's a big source of liquidity, but what you might not know is that owning Curve tokens and locking them gives you voting power in the Curve ecosystem, and the voting power decides which Curve token rewards are given to which pools. So basically, you can you decide where the candy gets dropped, right? So that allows you to reward the pools that you like and that you want to see grow bigger. So and then there's another protocol called Convex, which rehypotheticates Curve voting power. So basically, by earning Convex tokens, you earn by owning convex tokens, you own curve voting power, and the bulk of the curve voting power, I think, is tied up in convex tokens. And FRAX owns more convex tokens than anyone.
Yeah.
And that is the sense. So
Yeah.
they control the voting power, right? It's like owning Congress. It's like having a bunch of, representatives and senators secretly on your payroll. You own them, right? And that's that's obviously, that sounds like a corrupt analogy. FRAX is not corrupt. Curve is not corrupt. But the idea is still the same thing.
It's like they all have, I think it's more of a system of checks and balances. Like Convex owns a lot of FXX. Like FRAX owns a lot of CVX and CRV. Like they all own like a little bit of each other. So they kind of like this like loose confederacy of sorts, in how they're structured, because they're so intertwined, but they're independent at the same time. It's really interesting how that came about, and like they all wouldn't be able to exist without each other. Like, FRAX was like the leader when it came to like bribing and vote incentives, and so like that like kept the Curve protocol and Convex protocol going, and so like FRAX was the first to recognize that, and so like it's been like over like months and months and like over a year in the making, like all this stuff. But back to like the FRAX base, we roll it back to the FRAX base pool. Like now that FRAX has like a meta pool, all the rewards that it like would be getting, and like in like 3 pool, it's just like automatically voting bribing for it with the 3 pool. They're just getting with like the meta pool, and so they can just pass that on to like whoever pairs with their meta pool, because you know what I'm saying. So like instead of like them like competing for rewards, they already have it, and they're just like passing it along with whoever pairs with them. So they just turned a P to P environment to a P to E environment, which is fascinating. And so it's like in every stable's best interest to pair with like the FRAX meta pool.
Okay, so let me re-hypothecate what you just said. So FRAX has created this new pool, a 2 pool with USDC, and if you have another stablecoin like your Dyad or your Bean or somebody like that, and you pair with this new 2 pool, FRAX will use its massive Curve voting power to push some of the Curve rewards and candy at you. So by pairing with the pool, you're now guaranteed to earn Curve rewards higher than if you paired with some other pool, because FRAX owns a shit ton of voting power.
Yeah.
Is that correct?
Exactly.
Yeah. Okay. So super cool.
Yeah.
All right, Dave. Well, we're coming up on we're past the 40-minute mark. I'm just looking here. So it's probably time to wrap this up. So where can we find you on Twitter, and where can we find your podcast?
Yeah, so you can find me on Twitter at DeFiDave22. You can find my podcast on Twitter at FlywheelPod. You can find us on YouTube. Make sure you subscribe. You can find us. We have a little Telegram group. You can find us there at FlywheelPod. And yeah, like come follow us. We have a lot of good content. We have a lot of alpha. Like I love what I do with creating this kind of content. So I hope you all join me.
Dave, thank you so much for coming on the show. I always learn a shitload whenever I talk to you.
Yeah, thanks, Mark.
Sometimes it's like hard to follow because it comes so fast. It's like you have to dissect the fire hose, but there's always just like a ton of gold kind of flying at me. So
I appreciate it.
Yeah, and I think we captured a lot of it here. So thank you once again. My name is Mark Jeffrey. That's all we got. We'll see you next time.